Okay, what's going on? What's going on? Good afternoon. We're going to continue where we just left off for the Tuesday DRC with going into the Wednesday DRC, right? So we're going to be going over August the 6th, 2025, price action, what we ended up seeing, what we ended up acting on, just kind of continuing from where we came from. Now, if you guys don't have this document already, like I said, join the free Telegram and you can get access to this document so you can kind of follow along with what it is that I'm actually going over. So that way, when I go over and, just reference to, something that I improved upon, it's usually like three things in each category. And then I can, focus in on, the main things are what happened at New York, those first, 15 minutes going into like nine as well. And then looking at your overall day and grading yourself on the day. Now, something I want to talk about, you guys look, I'm going to really harp on this and actually make a DRC video, but one thing I really want to talk about is that you want to give yourself a grade on the day on something outside of P&L, right? Everything isn't always going to be about your P&L. You actually want to focus on what I personally do is focus on something I want to get better at in my execution, right? Because P&L is a result of executing the correct way. And so for me, I would rather be, grading myself on that. And that way I'm taking, the proper, setups that I really want to be taking just because I'm trying to follow, I'm not trying to force myself to produce some kind of outcome, right? And letting things come to me. So we'll dive right in, but this is the document here. So this is what I'll be referring to. If you guys want to take a screenshot or want to get access to it, just go to the free Telegram. But coming back into this, like I said, these shouldn't last more than 15, 20 minutes. So if you're just trying to catch something here really quick. Now, I like to look at the market from a perspective of 4 hour, 1 hour, because I use 4 hour for my direction and a lot of 1 hour structure to gauge kind of where we're at. So to kind of follow up where we just came from, remember, Monday overnight price, people bought the price up right into the 23,000 level. By the time New York opened, we shot up and buyers won on that sense for Monday. Right now, coming into Tuesday, we ended up having a very choppy day there at 9 a.m. Right, price created supply. Right, started going sideways. Overnight price really was just indecisive, and then those individuals let go. Price sold off. Right, we ended up selling like we talked about into these lows and ended up taking a profit before, the second half of the day, like lunchtime came up and pumped and hit our trailing risk after we broke structure here in the 23,200 level. Now, when you go into the next day, right, which is what we're doing here now, we're going to move into Wednesday, right, and just look at where the open is, right? Look at where the open is for the day. All right, it's already, what do you get, right? Right from the beginning, right? When you come right out of the gate here, the first thing you get is buyers stepping into the market on Wednesday, all right? Now, the next thing I like to mark is going to be that London Open, right? So London Open was somewhere, it was very weird. It was a weird spot, all right? So this is where it was at, all right? So this was the London Open for Wednesday. And so for me, as I'm coming into this, right, what I'm thinking, because I'm thinking about the previous day as well, is that the individuals who shorted, right, because I believe we're in a bullish, market overall, individuals who shorted are going to cover that position. They started to show themselves overnight, and a lot of individuals got in a little bit too early. And then what did they do at the London Open? They spiked the price back down into the imbalance, right? So now people are, I'm looking at this from a bigger picture, right? So now people are freaking out. This is like 5 to 6 in the morning and price basically mitigates into that imbalance area and starts to run up, right? So I noticed that, right? I like to do my outlooks around 7 a.m. So 7 a.m., this is what I'm basically seeing is that, shorts definitely have covered. We failed to go below this demand trap candle area, right? In that overnight. And then we failed again to go back below the 23,120s or lower before the New York even started. So now it's kind of like, if you think about it, guys, like, expected value and just different things that we'll talk about over time. But the same thing essentially happened that happened on Monday, right? Look how price on New York shot up, right? And we found buys in the 23,000, let's just say 100 areas, wherever that New York Open was. And then the same thing happens here in the New York Open, right? To where we ended up finding buys up. And what did we attack? We were attacking previous day highs and shorts, right? Because on futures, obviously we're looking leverage capital, we're looking for just a massive push up, right? Something that we can, protect and just, it can be a small win, it doesn't even matter, right? When you're thinking about those CFDs, right, you're thinking about those individuals who are short, who are covering, and you're coming for their price, right? And so we'll dive into the 15.5 1 minute of how we ended up finding these entries, but just wanted to give you guys some context of like understanding like supply demand. You had it was a small demand candle here. This became a demand candle in my eyes here as well. And then we started to play below that 50% level, which is where the manipulation likes to happen. Okay, so what we'll do now is we'll go into 5 and 15 and really like dive into that price here. And that was for Wednesday. Okay. So this was the cleanest day. Wednesday on the buy side, probably one of the cleanest days I had all week, probably my best day. I would say actually of the week, right? Because the other not Tuesday, obviously as you can see, that was hard. That was my biggest P&L day, but execution, like I told you guys, right? I'm not focused on um, so much of the P&L as I am execution and being able to manage my risk as prices making money available for me as well. So really quick, really good stacks. This is pretty clean and easy to see. You guys can see, I would hope, and over time, the demand. But 8:30 open was right here. So we had New York open. And let me get rid of that okay, we have London, right? So now we have that London open from overnight, price sells off, right? Like I was talking about into that 5:36 in the morning time, 7, we're looking at it and it's starting to shape up. Now, the one thing I like to look at on 15.5 is structure, right? Inside that 15, you started to get price starting to accumulate, right? On those demands. So you had a price come down, tap the demand, 23,150. Now, I also really like half levels and whole levels is levels that I like to play psychological numbers. So 23,150 was a key level right here inside demand, right? Prices also, when you're looking at technicals a certain way, right, you're also seeing signs of strength close, right, in that area like this. And so that was already a sign for me as well that, okay, we're making some new highs. And then price came up again and didn't make that new high, but it was attempting to kind of itch its way up, right, in my eyes, right? And so what I was looking at was like, okay, we have a high on day, and then we have previous day high, right? So 23,400 was target in those shorts, and 23,350 was even an area basically where that New York Open was, wherever that New York Open price was from Tuesday. All right. And so when you're looking at this now at the New York Open, the very first thing that happened was price rallied. So like this is the framework I'm showing you guys. I'm already like my mind is here from here to here. Right, so pre New York, we already closed higher. We're already doing this. Right, so now my eyes, when the candles start to form here in New York on the 15, my eyes are actually in here like this now. Looking at this is my demand candle, right? And looking to, like I said, attack back up to that previous 23,300 area or higher. So now let's dive into a 1 minute and 5 so we can really see how we found that entry. Because this is one of the better ones of the week. This is the one that set us up on CFD for being able to just, rock a trade out to the end of the week. Okay. Now there was also, I'll have to go and look. There was also divergence or something very specific on NQ, or excuse me, ES. Let me upload this. On ES at the same time on that day. So let me look at that as well because that was really a key for me of what they did. So on that day, no, we want Wednesday, 8:30. Oh yeah, this was awesome. Okay. So look at ES and then we'll go here. Right? Look at ES on this day and look at NQ body candle closure, right? ES manipulated people, guys. I mean, I personally really liked ES at 850, right? To 855. I thought this 5 minute demand candle was going to hold and they were going to rally back to 63 60s fairly quickly. But what did they do at the same time that they gave me my position on NQ, as you guys can see here? NQ, right? And we'll go over the actual New York. I'm just trying to show this, right? NQ had made this low here at New York, and then 9 So this was 9:30 to 9:35, price goes up, comes back down into that demand candle. Then again, 9:40 to 9:45 starts to show signs, like I'll go over in the 1 minute, and rallies up, right? This first move. Now, a lot of people, they find mitigations on smaller time frames in here on the way up, and they think they're done, right? But I knew that when we took that first move, which I'll explain on the 1 minute here in a second, into that high of day on NQ, and we had made this new 5 minute high. Well, at the same time, right, when you're looking at ES, we had done the same thing. So I was anticipating that they were going to come down and actually respect that area, which I don't play ES, so it worked out better in my favor to be playing NQ. But when that price came back down, this is a beautiful slow correction move back under New York Open into, right, a massive demand candle, right? So we love this isn't institutional, it's just showing this on here, but just showing you guys for demand, right? Price goes up, comes back into the area. And so, like I said, I'm gonna break down why we ended up, getting into the very first position, covering some of that position that made us available to add that partial back under this New York Open area after we got the sign of strength. So like kind of in here in this 23,190 area. But I wanted to show you guys that I was reading 5 minute higher lows as we were getting lower lows on ES, but it didn't matter. I mean, if you waited for one sign of strength, second candle, and framed up, you still had a really good target, but just had to realize what you were getting right there. Okay. And so let's go back to the window where we were at. I switched all these, didn't I? The window where we were at for that, I updated them. Let's see. Okay, so ES. Okay, cool. So now we'll go back to the 5 minute, 1 minute of that price. Okay. So how I ended up framing into this New York open order was we ended up being very patient. We were waiting, right? So this is the very first 5 minute candle, which would have been here, this white candle right here. And so for me, what I was ended up seeing is I didn't see a clear move at the New York Open, right? The very first candle was here, 830, 831, didn't really see anything clear here. 831 to 832, you got a shift in price delivery, right? So like for me at this point, what I'm looking for is prices to come back down and respond a certain way. So what I'm saying is like price goes up, I'm looking for it to come back down, right? And respond in New York and hold the level, not go lower than this yet, right? I'm looking for it to hold that level and give me something. So as you guys can see, first 5 minutes, 830, 835, price goes up, kind of takes off. Then you got 835 to 840, right? So that'd have been right here, 835 to 840, price comes and then does what? Takes the New York low. But it doesn't run past the 5 minute demand, 23,150s, right? So they're tricking people right here, right? So I'm still on my, just waiting at this point. Now, after we get the capitulation candle, we ended up getting a run on those lows, but what did we get? 23,150 half level. You got a sign of strength, 841 to 842, 842 to 843, right? And as you're starting to do that, I'm starting to look at that 5 minute candle and gauge, basically this candle's open, right? To its close, and I'm trying to make sure I stay below the point 0.5, and I like to get my entries in that point 0.8 area like this. And I'm looking at this candle right here, this black candle. Okay. And so what you can see is price as it's starting to move up. It's already above New York Open. So we ended up taking positions right in here. Like the candle was 843 to 844, then 844 to 845. Right when it was in this area, it was taking positions on buys. So it looked like this essentially right on our first rally up. So let's do it from a replay perspective, actually. Or it'd be difficult in a replay perspective, but we ended up taking the positions in here, okay? And so and they were buy positions. And so as that price started to go up, right, and we put our risk right here at the current low that we had right below 23,150s, right? And so as we started to make our way up, and in the beginning, it was just this rally up here. It wasn't, as soon as we entered the move, we went up here, kind of came down, showed a little bit of weakness, and then boom, shoots back up, right? And that was the area that had attacked, as you can see, the overnight liquidity, right? So we reached right into pretty much that overnight liquidity with that move um, again, right? Because we had it already set here, and they kind of got close, as you can see, pre-New York, but they didn't get higher, right? Like this candle right here. And so that was the one that actually put us above, right? Now, as we started to move higher and it was that aggressive, right? On this first rally up, just right here, right? Just to take this area. So I'm gonna kind of point this out what I'm showing. So just to take this area here, right? On that first, like right here, and this candle area here. Now, as we started to do this, I started to go, I had two contracts on, right? So one, I moved up into here, and then I left my other area break even. So as you can see, price ended up selling back off around like 850 to 855, right? And price came and took me out of one of the contracts, leaving me in one contract with the stop loss at the low. Then, right, and the next, going into 850 to 855, buyers stepped back in the market, right? Off those 180s, 190s, right? Stepped back in and price started showing strength into 855 into 9, right? Or 850 and 855. Now 855 into 9, price kind of slowly corrected back, right, into the area, but right at 9, buyers stepped in and shot the price up to the 23,280s fairly quickly, right? It was almost that first candle, 9 to 905, bam, just shoots it right up, right? So the remaining risk that I had on that one contract, I still had with the stop loss low because this is still my 5 minute setup still presenting, right? Now, as price started to pull back into that 5 minute, 1 minute area, I was anticipating that we were going to hold this area, right? And I was going to get to add back my contract. So that's what ended up happening. 920, 925, price comes down into New York Open right back into basically where my entry is. My stop loss is still right here under 21, 150. We got a sign of strength, 5 minute, 925 to 930. We had a 930 to 935, another sign of strength candle, but inside there we had a 1 minute mitigation setup, right? That was in our favor, right? So we already had our position. Price started to close higher than 23,200 whole level. And as price started to pull back into the 23,183s, I started to add that contract back. And what I did was I left my original risk and then I gave my new risk, right? Because it gave me a pretty good average when I bought basically the same price. And I was able to basically get the same price. And I had one of my, risk here and I still have my LOD risk, right? Then price extended out of the area on the 5 minute 935. So from right here, 935 up to 940, price extends showing massive signs of strength and attacking what? Shorts. Right? So they're sad, right? They're like, damn, I guess I don't have the short, right? And so that was exactly what we wanted to see. Perfect add-on day. If you really look at this and you're looking at it from a Fibonacci retracement, I love 71% retracements into a range. That's usually where I find the orders, as well being inside a demand candle. Also, I mean, you're reading technical price. I mean, that, essentially just made a higher low, right? Which was really awesome to see the continuation up into the higher points of the day, right? So that's how we ended up seeing it. First played that first run up. It's never just going to happen on the first run up, right? You're usually going to get caught in that. And if you don't have a um, trailing risk rules for your trading, then it's going to be very difficult for you to win those first setups because what people are going to do is you're going to get mitigated out of the position, right? Then price, so it's going to sell back off. You're going to basically have a terrible order, most likely because you're not positioning yourself the right way. And so it's gonna squeeze you and make you give your order back. And right when you give it back, it shoots exactly the direction you want, right? And so that's what mitigation actually is. So that's what we were seeing for the Wednesday. And I just want to kind of go back after I delete some of this stuff here and go back to that higher time frame, and then we'll catch up on what we see for the next day. Okay. But that was a really, really good setup. This is exactly what you want to see, me personally, when it comes to a setup, right? Let me actually pull this up here too. Documents. Mhm. Yeah, definitely what you want to see when it comes to the setup, right? So, something that we like. I'm just looking for my printable stuff here. Printable, not power phrases, but printable trading docs. Okay, so like how I look for buy entries, right? So you guys have this and you can see it. So this is a perfect way when you think about our buy orders, right? We ended up getting this is just kind of breaking it down very quickly. We ended up getting our step 6, which is that favorite step on step 5 from or on the minute 5 game board because when you get that low set. So when they're setting that four set step forward, it's like right here, right? The New York Open, they've set a New York low. Then they run the price, right? Breaking structure. They broke structure, right? Going higher, making new 5 minute highs, and they come back into the area, step seven, right? Which is aligning this module I'm showing you with point of interest inside, and then framing up demand candles is really going to help you take moves to the upside. Now, something that, once you get step six, that's where you're starting to tell yourself, where am I going to frame my risk, right? And me, it's always usually in step four, which I was telling you guys, all my risk was under 22,150s, right? So this can help you guys definitely, frame it up with point of interest inside demand. That's a beautiful setup. Now, something else you want to focus on is once you get above this arrow here, right, and you're actually extending higher, this is where the area, like once you've got the push down, right, and you know that you're going to frame up this edge in this area and price starts to rally in your favor, this is where now you want to have a 15, 5 minute, 1 minute trailing risk factors that we'll talk about in future videos really down on a down point because in a futures market and indices, for example, I can't speak for every market, but when you don't want to take yourself out of position too early, right? A lot of people will get a clap on liquidity or a new high, right? And they'll just take profit manually, right? There's nothing wrong with that, and sometimes it works, but something that I found is that if you actually, can figure out a system, right, to trail your risk, you actually can, produce more profits. You know what I mean? And you're not sitting there pressing the button manually, which is making you susceptible to emotional risk anyway. And so that day was pretty clean. So I want to go over kind of how that day finished really quick, and then we'll move on to the next day. Okay, so the 4 hour, just a continuation, and we'll go to the 1 hour here on the right. Okay, so just to kind of recap, right? Monday ran up, had those, aggressive, forceful type of New York Open orders that pushed us up. We ended up finding buys. Tuesday, we found shorts, right? Very aggressive. It was kind of crazy, 9 a.m. push down, right? Wednesday, we found beautiful, right? Beautiful buy positions with the manipulation on ES to go take out previous day highs. And then moving into, and so this is where we were at when you look at this from the perspective of going into Thursday now, right? We were on a 4 hour, we had made a high, we had made a higher low, and we were making new highs on a 4 hour, right? Moving into, right, Thursday and Friday sell off into the supply candle, right? So that's what we basically had seen. I think Wednesday might have been one of the most beautiful days. I thought Friday was, but now that I go back and really had time to really analyze here with you guys, I'm starting to really see that on a 15.5 1, that was actually the play of the week, right? Because also when you're really looking at 4 hour demand from a perspective, right? You have your demand candle here. Let's just kind of go over here. And like I said, where do you want to be playing those positions anywhere under that 50? So that alignment of that smaller time frame fractal, right, to take you up to higher pricing is also really good to see from a higher time frame perspective of, observing the masses doing the opposite. Because most people, when they've seen a sell off like this, they're just looking for continuation price to continue to sell. They're not understanding how this order flow actually looks. So I appreciate you guys watching this. Like I said, this was for the DRC for August the 6th, 2025. And what we're going to go over next is Thursday and how we ended up finding positions in there. So with that being said, I appreciate you guys watching again, and have a good rest of your night.